Good afternoon, everyone. And thank you for joining for today's webinar, which is Nonprofit Director and Officer Liability and Insurance, Protecting Yourself and Your Organization. And my name is Jennifer, and I'm the Manager of Communications at Integral.org. I'll be hosting today's session. And you can reach me in the chat at any time if you need a land acknowledgement. We would like to acknowledge that Integral.org is based out of Mohkinstsis, which is the Blackfoot name for elbow. This refers to the confluence of Elbow and Bow rivers that run through Treaty 7 territory. Mohkinstsis is the traditional territory of the Blackfoot Confederacy, which includes the Siksika, the Bacani, the Kainai, as well as the Stoney Nakoda First Nations, consisting of the Chiniki, the Bears Paw, the Good Stoney First Nations, the Tsuut'ina First Nation, and the Métis Nation of Alberta, District 5 and 6. We have a long way to go in addressing the tension between the legal and governance structures that we work within in the nonprofit sector and the efforts towards truth and reconciliation. We at Integral.org accept our responsibility to work toward reconciling this tension. We commit to remaining in a position of humility as we consider our history and current reality, knowing that the answers are not clear and easy ones, yet they require all of us to engage. We all have a connection and responsibility to the lands that host our lives, our communities, and our work. I am going to introduce at this time our moderator for today's session, Yvonne Chenier. Yvonne is a lawyer and philanthropy consultant and co-founder of Integral.org. She brings more than 35 years of experience helping those in the philanthropic, nonprofit, and social enterprise sectors as general legal counsel and as an advisor on organizational, regulatory, and governance matters. Yvonne, thank you for being here today. I will pass things over to you to introduce Doug.
Doug Tweddle is our co-speaker, and I'm so happy to have him today. Doug was born and raised in Edmonton. I was born in Edmonton too. We have a lot in common. Doug's a graduate of the University of Alberta, and he was a career senior manager for a number of national retail chains in Canada. Alongside these responsibilities, he facilitated paid volunteer days for his team members who volunteered with various nonprofit organizations. This experience led him to an abiding interest in the nonprofit sector and its contribution to our communities. Doug's been in the insurance industry for over 16 years, and currently he's a client executive with BFL Canada. His responsibilities within this role include developing and driving the business plan and strategic growth of the nonprofit segment, as well as assisting others in servicing the nonprofit sector. And I've spoken with Doug on these topics before and have engaged with him in various questions. So I'm very happy to have him to talk to us today about the insurance aspect of this important topic. So we have many sessions that Integral.org has done on webinar and live presentations on the whole area of directors and officers, liability, and risk management for organizations. So there's a lot of tools available for you on that specific topic. But the question of insurance always comes up in these presentations. So that's why today we thought we'd spotlight the mystery of insurance in the directors and officers liability area. And we're going to be covering that. Doug has a very concise presentation and a lot of stories, I might add, to share about his experience in this industry. So Doug will talk about the insurance aspect of it. He'll go over directors' fiduciary duties, which is sort of a recap of many of the areas that we cover in a specific risk presentation. And he'll talk about his examples of when he's seen claims made against directors and officers of nonprofit organizations. And then I'll end a little bit of a presentation on the Freedom to Care Act in Alberta, which is a unique statute we have here in Alberta that deals with protection of volunteers, such as directors and officers of nonprofit organizations. And I'll now turn it over to Doug to start the important part about the presentation, all about the insurance. Doug?
Thank you, Yvonne. Good afternoon, everyone. Jennifer, thanks for putting the slides up and for driving the vehicle, so to speak. It's a great pleasure to join everyone today. And I have to come clean. I love talking about directors and officers liability insurance. I'm really passionate about it. Having spent years volunteering and arranging for volunteers to go out from corporations and such like that. When I joined the industry and really decided that I would like to make my life's work in the not-for-profit, charitable, and family foundation sector, understanding and getting to truly intimately know what a D&O policy should look like, must be, has become one of my passions. And I unequivocally, without any any compunction, will let you know that I'm a geek and I just love insurance. So there you go. That's me. That's what we're at. Why do you consider director and officer policy? I think the first thing I like to start off with on every occasion is to remind board members that their organizations have been registered. They may be registered here in Alberta as a registered under the Society Act, or alternatively, they could be federally registered. But in registering, they are attaching their bylaws, their aims, their visions, their governance to legislation. And that legislation actually comes with a bit of bite. And what isn't widely known or hasn't been in the past, and my aim is for folks to understand it best, is that anytime one of us joins a board, we are personally liable for the financial well-being of that organization. So we are taking on the responsibility of making certain the entity, the organization, is financially viable. And by personal, the legislation is set up such that if an organization is found that they had messed up with their fiduciary responsibilities, that they'd made an error or they had willingly made choices, and through stakeholder claims, through crown or civil action, what can transpire is the board members can be held liable financially for those financial losses. And that means your home. That means your automobile. That means your savings account. It means that of your spouse or partner or wife or husband, or your children's registered education funds, if that's what's available, retirement plans. So personally liable is actually very significant. And the step to protecting board members from this is placing a director and officer policy. So one of the questions that was provided earlier at registration was, is it mandatory to carry directors and officers policy? Well, yes, it is actually, in the sense that to serve on a board without a D&O policy in place is putting your personal assets on the line. Any questions about that? Sometimes that comes up as a big surprise for folks. And here's my game. If you wanted to put questions into the chat, love to do that. And we'll just try to start a unique conversation using chat and see if we can't get any kinds of concerns or questions out there. So if you have any, please by all means do so. The policy and why you consider a director and officer is that you are also the organization has a bunch of liabilities that are pretty rigid. You've got liability with respect to employment, to volunteers, your donors, your funders, your stakeholders. You have all of these kinds of responsibilities and therefore liability. And a robust director and officer policy will respond to any one of those stakeholders or persons or organizations that may come out and make an allegation. So for an example, I can give you, and I like to use this as an example. Lots of folks are like, well, name me something, name where this could happen. Well, I had a client that did youth mentoring. And after an interim executive director departed after a couple of years, within 30 days of the departure, the envelopes started to arrive, the mail arrived, and they got opened, and all of a sudden it became abundantly clear that the organization had not met its CRA payroll obligations or GST obligations for a number of years. That's one. Two, they had a whole bunch of stakeholders who were now coming back and saying, well, listen, we provided you X dollars for this program, but the program never happened. So could you please give us back our money? And so we have a stakeholder. Three, we had a creditor involved who came back and said, hey, we've got a bit of a line of credit here. And so what are we looking for? We're looking for repayment. And you had some donors who had written some checks, written some donation money, who are saying, look, we hear you're in trouble. Where's my money? I did it. I donated it to you for a specific, aim, goal. And in all of these instances, this is where an example of a D&O policy is so real, because the policy was in place to protect each of the board members who were personally liable from the various statutory liabilities at the time of the difficulty. And so that's why you need to consider a D&O policy. Any questions? All right, maybe we'll go next one then, Jennifer, please. One of the other pieces that you have to understand is that we always go, oh, because we watch, like, if you if you watch television, you know that you're in court and you're defending and you're going to sue for $500,000 and you're going to win. And in the not-for-profit and private sector, one of the greatest pieces of cost or cost to the entity is the legal cost of defending. And directors and officers policies, when triggered, will cover the legal costs. Number one. So this is a way to protect your not-for-profit from what can become very burdensome costs with lawyers. The D&O will also cover the damage awards if there's a damage award. And one of the pieces that's important to understand is that, we all kind of don't think that people are suing very often, but what we know, what we see in the sector in Alberta, across Canada, is that lawsuits, claims, allegations are on the rise against not-for-profits. And they're coming in a variety of different ways with a variety of different backgrounds. And ultimately, what you'll find is that it is the legal costs. So like what I like to explain is if you are doing any kind of an organization, what you're going to find is if, for example, an allegation of abuse was made against your organization, the average cost, no offense, Yvonne, but the average cost from the legal sector, a lawyer, a good one who understands it, who knows it, who's got practice and background in it, can run $1,300 to $1,700 an hour at the moment. That eats up a lot of your reserve really quickly. Whereas with the D&O policy, with the right coverage, you've got it covered. Got some questions.
So Doug, that was my question in there.
Yeah,
I put a question in there. Do all policies include D&O insurance, duty to defend coverage?
Yes, if they are placed with that coverage. So here's what I've discovered is there are markets out there. Markets are insurers, folks. And so there's some brokers. You phone a broker and the broker only knows as much as they know. And that's it. It's like anybody else. I've spent a lot of years getting good at this and understanding it and trying to dig deep into it. So I know there's some entities, markets, insurers who are really good for not-for-profits. They have strong wordings. And yes, Yvonne, I want to see duty to defend. Number one, that duty to defend. And then I want to look at that and I'm going to say, okay, you're defending and you're going to take on the legal costs. And so what I can we'll take a look at in a little bit is how we're going to show some examples of where the expenses are almost as much as the settlements. So the duty to defend is huge, and yes, a policy should have that. So you want to make sure your market that you're insured through is offering you duty to defend. Okay. I have a question here from Callie. Is it also a good idea to get personal coverage for directors through WCB if they may be? Callie, we're going to come back to WCB because I just had a conversation earlier today about this. So we'll come back to you on that. Betty, can a president of an organization deem himself or herself held personally for any liability, place of director officer? No, Betty, they can't. Okay, that's a little bit of I'm not 100% certain I see where we're at, but let's just touch on that really quickly. The board operates as a whole entity. It goes back to its bylaws in its governance model. It's either operational or governance. Sometimes, very rarely in Alberta today, do I see both, where we're both governing and operating. You see them in smaller organizations where they're 100% volunteer. But for the most part, boards have moved to governance, and no, a single board member cannot assume liability on behalf of the whole entity. A board votes as one. It operates as one. Organizations that have leadership in place, paid leadership, executive directors or CEOs or whatever, volunteers, everyone on duty at that organization is actually doing it in the name of the directors and officers. And so the board has to understand its responsibilities. And maybe what we'll do, let's go to the next slide, Jennifer. We'll just touch on this a little bit. Yeah, okay. We're going to talk about how these sides fit in, and then we're going to go into the responsibilities, and that I think will help sort of set things a little bit straighter for you, Betty, I hope. So a D&O policy, beyond duty to defend, you want to look for side A, side B, side C. And you want to see if you've got employment practices and fiduciary liability. Now, fiduciary liability is not available to all organizations. We'll touch on that in a sec. Side A, this is in place when claims against an individual, a board member, or the corporation cannot or will not be indemnified. Whoa, that's such a big fancy statement. What it means is basically the organization's insolvent. It can't and doesn't have the means to financially respond to an allegation of or claim. Okay, so my organization that I talked about before, where they owed the CRA so much, where they owed vacation pay to their employees, the taxes for those folks were a mess because nobody had sent the taxes in, the payroll tax. Side A triggered because the organization actually was insolvent. And so that's a really vital piece to have because we don't think about it. But yes, not-for-profits go broke, and they do. Sometimes they just wind down, and those are good things, or they merge, or they realize we're not able to sustain our mission anymore, so we're gonna wind it down and roll it into something else. Side B is when I named Doug Tweddle, the board member at the organization that I've been participating in as the person, the board member who has caused me financial and reputational harm. Doug is the bad guy. So I go down to the street to the personal injury lawyer and I file a lawsuit. And I name Doug because he's the bad guy, okay? And Doug gets the envelope at home and he immediately phones and goes, oh, and side B is in there because it's going to defend Doug, okay? And then side C comes in, which is going to defend the entity as well. And so then side C steps in and takes over for defending Doug as a whole entity, as a 4-1, like a board is 4-1. And those are what you want to see as your basic foundational blocks, along with your duty to defend, which is in the wordings. Okay? With organizations, you want to look for employment practices liability. What's this mean? I wish we were in person with each other, but I'm going to trust in your head. Oh, side C again. Okay, you bet. Side C is the big wrap up. So what happens is side A, if you're insolvent, side B, individual board member, the Doug. And so then side C is the name of your organization. So I'm going to sue Integral Org, and I'm suing Yvonne Chenier. Side C will pick up for Integral Org, and then it will also pick up under side B for Yvonne. So I'm looking after Yvonne's defense of the claim, and instead of Yvonne having to go and deal with it all, the entity, Integral Org, is going to handle the claim. That work? We got it? Okay. And so employment practices. Likely someone has heard the words constructive dismissal, wrongful dismissal. I was set up. I got a new boss. They didn't like me. Next thing you know, I'm out of a job. That's employment practices liability. This is our #1 growing claim space in Alberta and in Canada with not-for-profits. It's for your employees. Leadership down. Here's what's interesting. Your volunteers are going and they're suing you. And this started, the habit really picked the habit, sorry, pardon me, the role of the volunteer raising, laying in claims. 2020, 2021, during the COVID period, they picked up on the fact that, you know, I wanted to be a volunteer. I went through the volunteer application process and you didn't hire me or bring me on as a volunteer. And I got the nice letter, and you're wrong. I'd make a great volunteer. So you didn't give me the opportunity for any other reason that an employee can come at a board member, at the board of directors. Race, gender, sexual orientation, something you didn't like about me, right? There was something. Maybe I've got a disability, or I'm abled in a different way. So all of those things, and this has come up, and you don't necessarily need to go to the lawyer for these. You can go to Alberta Human Rights Tribunal. You can go and hit them with a claim through, believe it or not, occupational health and safety is getting involved. People are saying that, you know, I wasn't included because I couldn't meet their standards. All of this, and so you want to make sure you got employment practices lying in there, and you should see it. And in terms of somebody's going to say, oh, what kind of limit? Well, here's where I want to just touch on this real briefly. A really experienced broker who understands the not-for-profit sector, who understands the marketplace, will know that a good D&O employment practices liability limit will follow form. And by following form, it means that there's just too much actuarial information available to the insurers not to provide a really good, robust limit. And it's something that you probably don't need to go looking to add more to if you've got a good coverage from a good insurer. And then fiduciary liability, I don't put on everything, because I got to see that you actually have a really significant exposure. So who would have an exposure? We control a trust. We control a family foundation that gives away money. We have the ability to invest the funds that are in our reserves on behalf of the organization as a board. Now I have a true fiduciary exposure beyond a normal not-for-profit. So you won't always find it, but when you have that kind of exposure, you want to look for it. So that's what you should be able to see. That's what's available. Okay. Any questions? What are we doing here? I'm going to get back to you still, Betty. Maybe we'll go to the next one if we could, please, Jennifer. Let's talk about your role. And this is where I want to talk about this portion, or your question, Betty, is these are your key roles. And so let's go back to the fact that you've got bylaws, and in a good world, you've reviewed those bylaws on a regular basis. If you change the bylaws, you do it through the processes in place with your bylaws, which is an AGM, and X number have to be there to form quorum, and then we vote, and we do this kind of thing. So true life story, I got asked to advise a colleague who was working with a not-for-profit, and what came up is that at a generation of board members decided to change the bylaws, but they didn't go through the process of legally changing them through the AGM process, through a vote of membership, and then for about 7 years and 3 different board elections, those illegal bylaws were being followed. And so I did a review, and ultimately what transpired is the board that had the question, the board that was concerned, had been illegally elected. There's a pickle. And so you have as a key role of your board to look at the strategic direction of your organization. If you have a CEO, an executive director, a director of leadership, you are the manager. Board, you are the manager. You cannot and must not abdicate that management position. It doesn't mean that you go with the, will you please write this email? Will you please do this, do this, do this? You don't, that's operational. We don't do that. How are you doing, CEO? Please provide us with your monthly update. How are we doing with our aims from the strategic direction? Because that's your board job. Where are we going? What are we doing? How are we going to get there? And why? Why? And a reminder that when you were registered under the Society Act or with the feds, these strategic directions were filed at the time of registration application. They're there. Now, currently in this government, you can't get a copy of them in under a year or two, but they're there. When's the last time if you've made a significant change in your aims, have you actually updated your registration? Question. That's looking at managing the strategic direction from the board point of governance, okay? You manage the CEO, you manage the executive director, you monitor performance. How do we do that? Is it annual, quarterly? You decide. But you need to monitor it. You need to do it fairly. You need to do it with HR practices. And if you don't have any of that kind of stuff on hand, I want you to reach out to Integral.org because they've got the tools. They're going to talk about that in a bit. But this is so vital, and you got to keep your records. And then you have to also be looking at risk oversight. Risk oversight is what's ahead for our organization that is a risk. Okay, so true life, real life story. So there's Doug, and I'm board chair of Food Banks Alberta, provincial association in 2020, representing 123 food banks across the province, all of whom are members. We're rolling along great, and we did not see COVID coming. Okay, how could we? Okay, how could any organization? So we all learned that moment. What we did have in place at Food Banks Alberta after 2013 and 2011 in the lake. Anyway, after the wildfires, the first big ones, especially wood buffalo, was we had emergency plans, we had fire plans, we had flood, we had all of that. We had looked ahead, we had it all available to our members. Your organization needs to do that. They need to take a look at this and looking at risk oversight. And today, we have to include pandemics because we learned. What's it look like for us if we have another pandemic? Not that I want one, but this is something you got to do, okay? Governance systems and processes. Yeah, this is your board work. How do we govern? What's in place to make sure we're doing it well? How do we double check ourselves? So we go back to the board person taking liability upon themselves, not permitted. A governance system is one for all and all for one. And so they say, oh, no, I'll take liability. I'll take responsibility for it. That's where a governance system and process steps in and says, sorry, you can't. You might want to, but you cannot. Okay. And I am seeing this coming to claims a lot in Alberta right now. In my practice and others, we've got some very well-meaning but misdirected individuals and some others that aren't well-meaning and misdirected who are pressing against the governance systems and processes at their organizations, and they're causing havoc and they're leading to claims. And it's not a happy place for some. Just to single back, you got to look after the money, the fiduciary oversight. How are we doing? Where are we going to get it? How's it going to happen? So then we get back on track. If bylaws are not being followed within a board, is there support for help? Oh, okay. Okay, let's touch on that, Betty. Okay, so this is where I sometimes will come in. So this I make it clear when I bring on a new client, I meet with leadership and I ask to be introduced to the board and I like to be presented. Sometimes it happens, sometimes it doesn't. But the number one piece with is that I, as a broker, should be the individual who steps into a board and says, you are not doing this correctly. You are going against your governance, you're going against your bylaws. And here's what I can tell you, and this is going to scare you. When you go apply for a director and officer policy with an insurer, if properly done, you provide an application. You provide a list of your board members. Contact information is ideal, usually. You provide a copy of your financials. You also provide a copy of your bylaws. And the bylaws, the financials, the board list, and the application form part of the policy. And so I had to remind a group of mine, a board of mine last year, that actions being undertaken by a few board members were voiding their director and officer policy. So, Betty, to your point, if you've got board members not following the bylaws, and if you have a D&O policy in place, I'd urge you to have a conversation with your broker to ask them to reinforce the fact those bylaws form part of your underwriting and that they're on the verge of voiding their D&O. And then I refer you back to personally liable. That makes sense? Okay. Black swans. Black swans are COVID. Black swans are a food bank east of Edmonton. Their executive director was so sadly killed in an accident that led the board to have to step in and run the organization for 6 months. That's a black swan event. That's okay. Go do it. You let your broker know, who lets your underwriter know. But go do it. Go do what's right for the people, the aim, but then get back in the correct lane. So part of managing a black swan or major event is also recognizing that we got to come up with a plan on how to replace leadership that we lost through this tragedy. And what's our plan to do that while we're managing? And it's a lot of this, and I get it, and it's tiring, and it's a huge commitment, but at the same time, it's what you need to do. Okay, we plan to change our mission and direction. Do we have to ensure we register the changes? You betcha. Yep, get them in front of them. Yep, send them up. Private college covered by an act. We are a registered charity. We have bylaws, but not sure where and who we need to inform when we make changes. Okay, if you're under the act, you have to go to the act to make any changes. So, okay, so you are under the act. So you're registered under the act. And you're also registered charity. That's CRA is probably what you're referring to for charitable donations. Tax is different than insurance. I would suggest that you need to follow through with the ministry where the act is. That's a guess, but that's what would make sense from what I know. Okay. All right. Any questions on any of this? I know that's okay. All right. And then these are the 3 duties. And I know this sounds pretty straightforward. You read them out, you get there. They're established in law, they're owed to the corporation. But then I want to talk about each and one of them. So, duty of care is to act honestly. And I put that top, number 1. And I know that you're all going, why would you do that, Douglas? But I do it because it's a necessary reminder that boards must act honestly collectively and each board member. You need to be diligent. You need to go in there and say out loud to the treasurer, I don't understand these financials. I don't get it. Take more time and tell me, how did the financials work out? Are we solvent? What do you mean you're asking me to vote on a motion to move $100,000 into a GIC? I don't get it. Tell me why. The diligent part is vital because when you go to board meetings and you have your motions and you have your votes, financials are my favorite to discuss. The board as a whole, when you accept your financials on the monthly basis, if you do it that way, and then if you accept your financials at your AGM and they're wrong, you have not been diligent and you failed your fiduciary duty. So you failed in duty of care, which you failed in fiduciary. So you really mucked it up, to be honest with you. So, as a board, we're always sort of worried about asking the question, but I love to work from the premise of saying there's no stupid question except the one we didn't ask. Okay. And then exercising power only when appropriate. And this is where, to your point, you got to go back to your bylaws. You got to go to policies. You do it when you're appointing, supervising. You've got to do power only when appropriate, which is a really gentle, I hope, kinder way of saying that you cannot, as board members, go in there and circumvent the operations of your leadership, your organization, just because you think you are the board members and can do so. And I see it. And it doesn't usually end in a happy way for lots of people. Okay. So you got to be obedient and comply with all the legal requirements. And then you got to spend time, right? I just was at an organization on Sunday. It's a board that meets Sundays afternoons. Went in to meet with them, and they're working on their strategic plan. And what I love to see, what was so heartening, was that they came to the decision that we might need a whole day because we can't rush this one. We got to get it right. And so that's their duty of care. And then here's what I love to do is best practice is to rely on experts. And I'm going to hear we have no money. Well, you don't necessarily need money as a not-for-profit because you are doing something wonderful. You are doing something to help, to lift, to enhance. And there are others who like that, who want to help you. They don't want to sit on the board, but by goodness, they might want to be a friend to the board. And so you can go out and say to the HR people in your community who are really good at HR, hey, we're struggling on these 3 fronts. Have you got some advice for us? Could you come be a friend of? And you can come to Doug as an insurance broker that's not affiliated with you and say, and I do this. We're concerned and we're not getting a straight answer. What do we got? And I'll give you a few minutes to do that for free. Why not? Because what you're doing is important. And then you got Yvonne, and you got Integral Org, and you got all these options. It's about making sure you actually access them. So that's your duty of care. Okay. And heart, let's not forget the heart part. That's next. I think we can go on, Jennifer. Thank you. Duty of loyalty. Oh, okay. Director cannot profit. Cannot profit. That includes helping yourself to the cookies at the food bank. It includes benefiting, perhaps professionally, from something from your organization, because then you're creating a conflict of interest and you're not following the duty of loyalty. And then you have to take the corporation's interest first. Take your own hat off. And that is vital. And this is where I often see stormy weather, is that a few folks on the board just don't like it, don't think it's right. We've always done it this way. We're not interested in diversity, inclusion, and equity, or we're not interested in this, so we're not going to do it. And we're going to fight hard that it doesn't get done. Okay, but is that in the corporation's best interest? Is it meeting the requirements legally of the corporation, of the entity? So I'm really clear about this one. And I find in my practice, the next one is usually a slam dunk, but when it isn't, it really isn't. And this is to act honestly and in good faith and in the best interest. And let's be clear, humanity is good. Volunteers on not-for-profit boards, or even if you're compensated, they're good, and they're acting honestly. They're acting in good faith. But when they are not, they are really not. And it is just fascinates me over these years to have seen it. Your conflict of interest is huge. So I sat on a board of directors, Food Banks Alberta. The minute insurance came up, I walked out. I was gone, left the room. Okay, total conflict of interest, because that's how I make my living. And then, Yvonne, did you hear at the board meeting Tuesday that, and this disclosure, keep confidential information, and it is phenomenal to me in this sector how you hear things along the way that you know are coming out of board meetings. And it's just there. I'll just leave it at that. And then you can't take advantage of your position on the board. So that's taking the box of cookies again, just because I'm a board member. Okay, so that's your duty of loyalty. I think they're pretty straightforward, but I like to go through them because not a lot of people do. Know the law, know the law, know the law. Are we following? Are we applicable? Are we up to speed? And obey it. And let me be clear. Engaging in illegal or unauthorized activities, not only is it contrary to the law, it voids your insurance policy. Criminality, illegalities are excluded under director and officer. Okay. And carrying out the organized mission in accordance with the purpose stated when registered as a not-for-profit entity. So I got asked in October to step in one evening to have a conversation where new leadership, distracted board, maybe not entirely engaged board, came to the realization that a step had been taken by the entity that was totally contravening everything that was their purpose stated and registered with the Society Act. And they hadn't put the pieces together until I said, well, this is your aim, correct? Right? And this is what was registered, correct? Yeah. And then this is the action that you're talking to me about, yes. And I said, well, this is contravening this. So you're way offside. You're actually not, that's actually illegal. And that was a moment. That was where we had a far less disengaged board. Okay. And so I can't stress enough the fact that as your board, you gotta understand obedience. You may not like it, but then ask why, share why. I hope you're in a position where you can say, it's time we've got real board members because we've got to follow the law. Okay. And there's lots of organizations in this province who don't want to, and they're coming up against, what do we know? Claims. Okay. Any questions on these three? Nope, I've bored you to death or you're all watching Netflix. Okay. We'll move on. Legal duties equal moral. Okay. This is how I like to go with it. Legal duties, and Yvonne certainly can touch on this, is 400 years of common law. Your stakeholder, your funder, your donor, your clients, they're going to hold your board to the same standard as the law court. And don't think they won't. right? Oh, we're just a not-for-profit. No one would sue us. Oh, we're just a not-for-profit. We're the good guys. We can make, you know what? I'm going to do it and I'll tell them later. No. The same standard that applies to the courts is being asked of your board by your stakeholders, your funders, your donors, your clients, okay? And your legal duties, they're there. And so here's what I like to do is just say, you know what? What's a duty of care, loyalty, obedience? It's common sense. What a reasonable and prudent person would do, okay? And so I always like to roll it into, I'm very lucky. I got an 88-and-a-half-year-old mom. And Anne was in the not-for-profit sector a long time ago. And she loved it. But she also, in my view, raised really nice kids, because every once in a while she'd say, get to the corner, sit it down, think it through, and figure out what would be reasonable to do here in this situation. Figure it out and be reasonable. And that's kind of how we were encouraged to think of things sometimes. And so boom, that's what I need your board to do. So to circle back, I have a board president or person who says, no, I'll take on 100% of the liability for what I want to see done, not what a reasonable person does. Think about it. Oh, I'll take 100% of the exposure. So therefore it's not reasonable. And therefore, why are we doing it? Okay, common sense. Why would you do that? So therefore, I want to know the why. Just saying. Thanks, Yvonne. You got it. Okay. So that's your legal duty versus your moral duty. We all have to find our own way. I will share with you that when the moral duty slides, inevitably the legal duty is impacted. And what I see usually are claims, lawsuits. And then I see trouble. I see reputational trouble, financial trouble, loss of funding. Okay. You see it. And so all of a sudden you're in a big, hard, nasty place. Okay. So as an organization, that's where we're at.
Doug, there's a question about
Yep.
staff doing something illegal, and I think you should answer that, and maybe you can highlight the difference between directors and officers insurance and commercial general liability insurance for an organization. That would be a good time.
For sure. I'd love to do it. Okay. So we got our D&O. We're talking to you as board members. This is the for the board. Your commercial general liability is the liability in place that we put in place for a not-for-profit or a private sector company or anybody. It is essentially liability that responds to claims of bodily or property injury through negligence. And it is in place for, and a nickname sometimes we use it is slip and fall. I didn't clear the ice in front of my building and I slipped and the lady fell and the lady broke her hip. And now she's suing me, and she maybe should, because I didn't clear the ice for 5 months because I was negligent. What response? Commercial general liability for bodily injury, or I caused harm. In terms of a staff member conducting an act that may be illegal or at least not in the organization's best interest, could this void the insurance? No, absolutely not. Okay. They're doing it on behalf of your board. You don't have care, custody, and control of that individual. You have leadership who's going to figure it out, and it happens. Right? It happens in private sector, it happens in not-for-profit. What you have to do is be transparent about it and come back and say, oh, we just found this out. What steps did you take? Make sure you got your HR policies in place and following them. Okay. And Yvonne's going to talk about record keeping, I think, a little bit too. So no, don't worry about that piece. The policy will respond if a claim were to arise there. And here's the thing. When the staff member has done something illegal, that just became a matter of law. The impact on the organization is separate, right? It might impact them in that they stole the funds, let's say, okay? But in stealing the funds, they haven't harmed the organization. It's just we want to find out how they stole them so we don't have it happen again. Make sense? Okay. So commercial general liability, that's your entity's operations. It's your When you go to rent a space, it's called tenant's legal liability. I love talking about it as well. But this part we're talking today is about your board, and it's separate and it's very different because it's there because really ultimately it's your three duties and your fiduciary and the overseeing and the governance. Okay. Does it sound good? Okay. We could go next, please. So we're going to talk about some claims here. Read through them, but what I do is I go to my insurers and I say, hey, tell me what you're seeing. Like, what do you see? Because, hopefully, what do meeting minutes need to cover? Is it saying a discussion followed? I'm going to let Yvonne, do you want to touch that one? Thank you. So employment practices, wrongful termination. Okay. This is Northbridge Insurance. Northbridge insures a lot of not-for-profits in this country. Very, very big. They're one of the top 5 domestic insurers. And they're very good on lots of fronts for lots of different organizations. You can see what they're seeing. Okay. Social diversity, inclusion is coming to the forefront. And then CRA matters, right? There has been a lot of mess ups on charitable deductions and charitable receipting. And there has been a lot of folks coming back and saying, oh, I'll do this for you. You just give me a CRA receipt. Well, is it legal? Okay. But the employment practices piece, yeah, huge. I'm going to leave it at that for a minute. Travelers, again, another big one. They just merged with Definity Economical, who are a very big insurer for not-for-profits. I have an insurance program online for small to mid-sized little nonprofits in Alberta that is underwritten by Definity. And its employment practices, again, 80%. 80%. Okay. So if you're sitting there, we're sitting as board members, we're looking at our governance. Remember, we talked about the words oversight. Where are our HR practices right now? What are we doing? Have we done any updating on our applications? Are we, how long do we keep files? Where are they? How far back can we go? What are we doing about, onboarding? What does that look like? Application, interviewing, onboarding, right? You can get hooked up, and I touch on this. Yvonne's going to do a really great job on volunteers in a bit. But one of the pieces insurers love to see is that if I have this process to hire an employee paid, I use the exact same process for my volunteer. Do not make them different. You might have different questions to the job responsibilities, but keep them. So if I have to have both apply, both reviewed, this number of references, so that it's identical. Because what you want to do is create a defense that says, no, we did not treat you any differently. Volunteer to employee, or no employee, we treated you no differently than we did our volunteer. That's it. Are there firms you can recommend for D&O insurance or a database? Oh, golly. Okay, Nathan, I'll come back to you in a little bit. So those are travelers. That's Northbridge. Okay. Next claim we're going to show you is donors. Oh, okay, here we go. So you can read the one about the church. So one of my all-time favorites while you're reading is really nice little part of southern Saskatchewan. And they wanted a new hockey rink. Good, hey? Why? What's not to love about that? It's Canada. So they get agreement from municipal level, provincial level, federal level to provide X dollars on the basis that they raise 25%. Okay. So a little over a year and a half ago, or a year and a half into the build, sorry, the 3 levels of government come back for an update, and they discover that nothing started. They haven't broken ground, and it's like, well, why? You have our money. And they come back and go, well, we couldn't raise our 25%. And so the board is saying, 3 levels of government said, well, okay, that happens. Just return what we gave you, and we spent it. You what? Yeah, we had tournaments and we sent everybody on road trips, and they blew through all of it. And I use the term blew through because they absolutely did not meet the requirements of their contractual agreements. Result was an enormous claim, $50 million, right? That bankrupted that hockey association. Okay. Not a good place. So there's what we're seeing. We're seeing donors coming at us hard right now. I do not want to dip into deep to operations, but should we review HR policies to ensure best practices? Always. Yep. And again, this is where it's just part and parcel of maybe an annual review from your board. Your board needs to decide. But you've got to figure it out. How are we going to do it? So, ideally, you have a calendar of what we're going to do this year, and then next year we'll revisit this. Maybe you're doing in Alberta, for example, you can go to the Boland report, which gives us a really amazing eyes view of pay, number of people, number of vacancies in the not-for-profit world. It's a fantastic document. And I see boards that are so deeply underpaying individuals. And then the individual says, I need this much money to live, to survive. And I'm also earning, like, that's what I should be earning. And they're like, no, you shouldn't. Like, the Boland report gives information. And with HR, go find the information. Go get what's up to date. Okay, next one, please. Okay, third party. Yep, filed suit against the foundation, improperly infringing intellectual property rights. Okay, the claim settled, and it was for over $400,000. So this is where third parties come in, and they will come at the not-for-profit out of nowhere. But we are seeing a lot of lawsuits on intellectual property. So for heaven's sakes, don't use Mickey Mouse in your fundraising. Don't use anybody else's logos, brands. It might be a volunteer putting together who just loves, that particular image from that particular brand. No. They're watching and they're protective. And so you don't do it, because once you get into it, it's expensive. Okay. Next one is, all right, discrimination, harassment, wrongful termination, retaliation, hostile work environment. There are 7 legal forms of abuse in common law. We immediately and naturally think of sexual, physical, okay? But there's verbal, there's emotional, there is psychological, and there is neglect, and there is harassment. And we are seeing harassment claims rising. And honestly, I'm going to be really clear. These are employees who sometimes are being harassed by board members. And I'm going to go really to a truthful place, which is that I have 3 claims of this nature open on my book of business, whereby allegations have been made by past employees of harassment, and there's been enough information to consider those allegations what's called founded, which means that they can proceed to court. Okay, and so this is an example of how you as a board can get yourselves into a really sticky mess, circling back, by not following the governance pieces, not following the bylaws, the policies, the procedure. Like, this is where the fundamentals have gone off the rails. And when you see it, you see a loss of 80,000, which included 25% for costs alone in this claim. Okay, this was under the American Disabilities Act. It's harder for me to provide a Canadian example because most of the time they're sealed. Okay, we don't get a lot of information anymore. Okay, but that's it. Watch your employees, and I add volunteers. Next one, please. We're done. Good. All right. Sexual harassment, and then retaliation. And so I will add that I have seen neglect, allegations of neglect within my career, by the leadership, which is why I was terminated. Therefore, I'm suing the board for wrongful constructive dismissal because I was neglected in my career. Well, nobody did an annual employee review. Nobody did this. Nobody, like, none of the HR was really uh, behind in what standards are for today. And there was a very good case there which settled. Okay. And then you've got, things like retaliation. So workplaces, you can pick up workplace behavior, and not for profits are not immune. And when you put into the mix volunteers and then a couple of paid ones, and then you got a client base, and you put it all together, it can get very messy quickly. So these are examples of where we're seeing your D and O claims arising from. I'm working with a board right now where a volunteer has been criminally charged with something, and that volunteer's other half has been a very significant part of that organization for a long time. And the board was like, oh, what do we do? And that's when we came back to duty of care, duty of obedience. And I was like, what does the law say you need to do? Right? And so they have suspended any kind of interaction until everything is resolved. Very difficult. Okay, what do we got here? If an org struggles with funding and possibly the funds may not be coming, and staff are warned that this may lead to job losses or org closure, scary for staff with this messaging. Could this be psychological abuse? No, it's sad and it's unfortunate, and it's not. I'll leave my opinions out, but I think you go seek your HR, get your HR to help you with that, because you got to do your messaging properly. I'm sure you have. I have no doubt. But no, not at all, because what you're doing is simply lining them up. As an example, in May of last year, GM in Ontario at Oshawa made it clear that the way things are going, who knows where they are. And today they announced 1,500 layoffs for Friday. And so you're doing your job. That's good governance, actually. Right? If you came out of them nowhere, that could be tougher. So I like it. Volunteers, here we go. Full-time position due to sex, race, and pregnancy. Okay, defense costs paid 10 grand, and the loss reserve is 65,000. That's a lot of money for a volunteer. Okay, and so that's where you're seeing it. There's one pending at Alberta Human Rights where there's a really good allegation of the race being a significant issue, and it might stick. And it came as a very big surprise to the board that it might stick, and so therefore, and to their absolute credit, that board was like, where did we go that we didn't understand this was happening? Like, what weren't we doing? So they went back to the basics, because it's going to happen in the sense that you lose sight of stuff along the way. You're volunteers. So there you go. That's next one is members, I think. Am I right? Yeah. So if you're a membership chair organization, okay. So here's a good one. The Taekwondo organizations of Southwestern Ontario. If you've ever been there, you know it's lots of people, lots of little towns. 350 Taekwondo clubs came together and created a membership, an association. Super cool. Brought down the insurance for everybody, gave everybody an opportunity to go do Taekwondoing everywhere. All great. Okay, COVID hits, they're locked down. The association was 100% dependent on the members' fees monthly to keep alive. And I can't use the Taekwondo club, so I'm not paying you this month. Oh, you took it out of my account automatically, which I arranged before COVID. So give me my money back, please, because you did not deliver the service. Well, the money was being used to operate day to day, rent, heat, electricity. The members sued. And that one's not resolved yet. that's still in front of the courts. So members can come against boards, and that's what's happening there, okay? And so it's important to understand that it all might feel lovely and wonderful right now with our members until something isn't, and that's why D&O's got to be there and in place, okay? All right, and then I think one more, and then that's beneficiaries. This was, national origin, religion, sex. Get this. Read that one. This blows me away. All of this went down in a drug and alcohol rehab center. Okay. It was dismissed, but it's the $10,000 in defense costs. And that's what I say about D&O policies. It's the defense and the duty to defend and it being in place. Okay. That is my portion. I just want to touch on the question about a list. No, there is not a list of insurers who, that's not true. You can go online and you can say not-for-profit insurance companies, and you will get a list. You will find Northbridge, you will find Definity Economical, you will find Aviva, sometimes. Okay. And so you can do that. If you have insurance in place and you've got a really robust, happy relationship with your broker, you are within rights to say, and I wouldn't touch on this. Could you market our account, please? When's the last time you marketed our account? Let's give them benefit of doubt. Oh, we did last year, and you're still good here at Intact. Okay, great. Okay, but you will most often hear that no one's remarketed your account because they don't earn a lot of money on it. And it's not the great price for and so out of 33,000 charities and not-for-profits in Alberta, lots and lots of them don't get remarketed because the broker binds it, gets done, and then they just renew and renew and renew. Well, I work a little differently, but my thought would be start there, see how often they're doing it, and ask them to do it if the relationship is great. If not, see if somebody can hook us up, and what I'll do is I'm going to send you some stuff. I want to talk to you, Randy. Miss this background. We're a very small organization, only volunteer based. Fair. What's the worst case scenario if we do not have coverage? Your house, your automobile, your personal savings. For example, someone comes after us after injuring themselves at our space. Injury is different. We have regular coverage, but not sure about D&O. Okay, regular coverage is, I hope what you're referring to is general liability. If you have general liability and they allege that they were hurt or injured, it has to be through negligence on the part of your organization. If you have general liability, you're covered. However, as a board member, you're not. And if I sue your board, you're paying the lawyer to defend you. So I appreciate the whole concept. And so I'm going to be really blunt. In 2022, I joined BFL Canada as a client executive. And one of my things that I'm pushing for and wanted to see happen is an opportunity for small to mid-sized not-for-profits to go online and apply for and bind insurance if they fit a criteria and eligibility. And I'm really proud to announce that I launched it with the support of my BFL colleagues and teams November of 2024. We just got going, and you can purchase a general liability for as low as $300 a year premium with a $25 fee going in the insurer. $325 for $5 million commercial general liability. Now I feel like I'm the KTEL salesman from 100 years ago, but I do want to let you know this is my legacy. I'm passionate about it because I do think it's outrageous that small organizations with what I'm clear probably have very minimal risk exposures cannot get a break from insurers. And that's really what drives me with all of this. So there you go. That's me. Thanks, everybody. Any questions? Over to you, my friend Yvonne.
Thanks, Doug. That's great. I mean, it's so interesting to see the insurance aspect of it and your war stories. And in this case, you were playing the bad cop, and I'm going to play the good cop and talk a little bit about how they can protect themselves or how they are protected against all this, which usually, I'm doing the bad scenarios, myself. So this is good that I only have to talk about the good stuff. So you've alluded to some of the liability protection. And I'm going to talk a little bit about the Freedom to Care Act in Alberta and also indemnities, just a little word on indemnities. But and happy to get some questions as we go along, although we've got about 15 minutes left. So the Freedom to Care Act is an act that you should all be familiar with if you're in the nonprofit sector, working as a volunteer, a director volunteer, or even someone working inside the organization that manages volunteers. And the Alberta government, our friends at Community Development Branch, have all this wonderful information on a website. So you just click on that and it's all at your disposal. But this act is intended to protect volunteers from liability, and allow them to volunteer freely without worrying about putting their personal assets on the line, like Doug said. So, and don't forget, volunteers would be directors and officers if they're true volunteers. So do not in any way pay your directors or officers a salary or any kind of kickback or subsidy to be a director or an officer, because then they're not true volunteers. So these are the key things you need to manage. But these are very good protections. And the next slide talks about what you have to watch, because sometimes they're not protected. And these are pretty standard legal things where people aren't protected from many things if they're acting with willful, reckless, or criminal misconduct or gross negligence. The unfortunate thing is that these are legal terms that have many definitions from the common law, case-made law, and in the case of our act, it's not quite clear how the courts would interpret these on the part of a volunteer at this point. But as long as you're volunteers that are acting in the scope of their duties, and I'll talk a little bit about that too, because they have to be acting in the scope of their duties to be protected under this legislation. They're not covered if they're driving a car in the scope of their duties. Obviously, we're all expected to have our own insurance and for driving cars or motor vehicles. And if it was in commission of an illegal act, of course, that's not going to protect the volunteer from liability. And if they were, and this is right in the act, if they were using or impaired by alcohol or drugs at the time of the act. So this, in a nutshell, what it does is if a director, an officer who's a volunteer, or indeed any of your volunteers in your organization are acting within the scope of their duties, and that is clear in the act that they have to be acting within the scope of the duties. So director's scope of duties, Doug just went over them. Common law duties, that is the scope of duties. Volunteers, though, are key. Volunteers, you tell them what to do, and you should have it in writing. You should have, these are your duties. So if they are performing the duties that are within the scope of the duties that you give them, they will be protected. They will not be responsible if anything goes wrong, as long as it's not, negligence, illegal acts, motor vehicle, or impairment. So that's very key for the volunteers. We did get a question about how to manage and protect the organization from what the volunteers do. So the volunteers will be protected, as we say. However, as we've talked, the organization is responsible for the acts of their volunteers. So the organization is responsible for the frontline volunteers that you have that have a written scope of duties. It's the organization obviously is responsible for what its directors and officers do as well, if there's someone who's been injured or affected. And that is why you have the D&O officers insurance policy to protect the directors from personal liability. So the organization itself is still responsible. This is so key to remember. And the Act does very clearly state that the organization itself has no right of recovery against the volunteer. So the volunteer is not liable. The organization still is liable, but it cannot recover anything against the volunteer. However, that's where commercial general liability insurance might come into play and directors and officers insurance might come into play. So that's a key act to look at. Now, this act has only been around in Alberta for a few years, and there's been one reported case that directly relates to directors and officers. And it's the cases, the citation is in the slide, and it clearly, after they looked at the behavior of the director in this case, who was trying to claim protection under this act, the judge decided that the president, in this case, the director was also the president of the organization, was in breach of her duty of loyalty to the society. And therefore, since she was in breach of her duty of loyalty, she wasn't acting in the scope of her duties, the common law duty of loyalty. And therefore, she was unable to claim the protection under this Freedom to Care Act. So the quotation right from the case there is very important to remember. Actions taken in breach of a director or officer's common law duty of care and fiduciary duty to an organization are the antithesis of acting within the scope of their responsibility. So it's key to remember, and that's why it's so important to remember your duties and to have the appropriate insurance to protect you. Next case, I think, is the next slide, a little bit about indemnities. Doug touched upon them, but they do always arise. And indemnities are a contract between the organization and the person they indemnify. In this case, it would be the directors and officers that we're talking about. And so sometimes directors enter into a specific contract, a piece of paper, written agreement with the organization for indemnification. And sometimes you find clauses in bylaws that purport to indemnify the directors. So there's all sorts of muddling that goes on about what an indemnity is, if in fact the directors and officers are indemnified, or if in fact, and we looked at, I think, your B coverage, if in fact the organization was capable of indemnifying. Sometimes you find in bylaws that the organization cannot indemnify, or there's some reason that the organization cannot indemnify the organization. Potentially all the assets are held in trust, for example, and there's no money to indemnify. So these are things you have to really think about. You don't bandy the word indemnification and indemnity around loosely unless you actually look at the details. But it is important to consider, especially in the case of insurance, because really insurance is the best form of indemnification you can have for directors and officers. It's backed by someone. So there you go. So I'm going to turn it back to Jennifer to talk a little bit about risk management tools. There's lots, but before we do that, the best tool you've got is to actually paper what you're doing. Paper your due diligence. Paper how you are doing your duty of care, your duty of loyalty, your duty of obedience, things like that. And there was a question about what should we record in minutes. Well, first of all, your policies, your procedures should all be there as to what you should do and how you should follow them. In case something goes wrong, you say, we followed our policy and procedure. That is potentially due diligence. Say, we don't have any policies and procedures. We just wing it all the time. I mean, that may be an indication that there's something wrong, or, there might be issues with regard to that. But minutes are minutes of any meeting, a committee meeting, a board meeting, members meeting, any meeting. The minutes are the official record. So if you are having a discussion and it's a due diligence discussion or something that would show the director's obligations are being met, you should record it, the decision. whether or not you record all the talk that goes around it, etc., that is up to your individual organization as to what your minute-taking policy is, what your documentation policy is. So you should give serious thought to that, because that would be something you should follow as an organization. And then, your due diligence is written down in your minutes. You can show somebody, or it's no, we don't have verbatim conversations in our minutes ever. So the fact that you had them and you admitted it once or omitted to put something in there once isn't going to be a red flag. Oh, they probably talked about it, but they didn't record it. So you have to think about all this and do it consistently. There's lots of other things you could do. The one slide talks about, your job descriptions. Remember, the duty, the scope is very key for your officers and directors. Teach them what they're supposed to do. Put board agenda items every time to talk about things that, duty of obedience, we talk about it all. Risk management. The committees, have the committees with some identified terms of reference, so the committees know what their responsibilities are and what their duties are. And of course, review your governance practices. They could change, they could improve. The law changes, the best practices change. There's cases every day that come up that make you pause and say, oh, we should do things a little differently so it doesn't happen to us. And these are just cases not in the courts, but in the newspapers, in social media, you see some interesting cases. Lots of resources. Jennifer, are you going to talk about the resources, or?
I think I will
Okay.
just quickly chat about Integral.org's risk management toolkit. Just going to put a link into the chat where it can be found. So this toolkit is on our website, and it has been developed by Integral.org. It was informed by experts inside our organization and outside of our organization. And basically what it does is it gives your organization an opportunity to investigate and measure how well they are managing risk at this time. And just going to move to the next slide. So the toolkit itself requires you to answer some specific questions about what it is that you do and the practices along the lines of the things that Yvonne just mentioned. And it also includes definitions and examples to help you really understand what your risk is and how well you're managing it. And it does give you a dashboard that will let you know about your general risk management ability and what things you need to do in the future to continue to be a good risk management organization. And I'm just going to check the time. So we have had a lot of questions along the way. I'm just going to pause here and see if there's.
Yeah, I do see a couple more that came in,
okay.
And comments, and maybe more might come in the next few minutes. But the question about the in-camera meeting minutes, I mean, that's definitely your policy of your organization. Okay, you really need to focus on the policies you're creating and make them and follow them. so it's always consistent. In-camera meeting minutes, there's lots of information about what to do with those, including the one that was recommended here, Mina's Guide to Minute Taking. I've taken courses from Eli Mina on minutes and governance, and excellent book. I use that minute guide a lot and share it with organizations, so I recommend that. So those are the questions that I thought related to what I said about the risk management. And there's lots of risk management matrix tools on the web for specifically for nonprofit organizations. You don't need to reinvent the wheel.
Don't reinvent the wheel. Callie, I missed that. Sorry. WCB is excellent. Get it. Sign up. Here's the thing. I had this conversation this morning. You can get what's called employer's liability under your CGL, but it's a limit. It's like 500,000 or $1 million maybe. And here's the thing, it runs out if you have a catastrophic loss or multiple people injured and you may not have sufficient, whereas WCB has no limit. Its legislation is in place to put the person right at the time of loss or help re-educate, redo all sorts of things. So yes, yes, yes to WCB, please.
All right. I would like to thank everyone for attending. I would like to note that as there's just been another question, we are going to send out the slides and the recording likely tomorrow to everyone who is registered in the webinar. And additionally, they will be available on our website. I have put a link into the chat for a feedback form if you have any thoughts about the webinar today that you'd like to share. And that will be in the email that we'll send tomorrow as well. And just want to follow up with another note about legal clinics. If you have a law-related question about your nonprofit, and you would like some thoughts, we have an opportunity at Integral.org for a free legal clinic, which is an opportunity to sit down with Yvonne Chenier and get some thoughts and ideas about that question. And you can find out more about that on our website. So again, I would like to thank both Yvonne and Doug for being here today and sharing their expertise. It's been a wonderful opportunity for me, for example, to learn a lot more about insurance, things that I didn't know before about D&O insurance. And yes, I'd just like to thank them for their expertise. And I'd like to thank every one of you for joining today. Thanks again.
Bye, everyone.
Thank you for your time. Take good care, everybody.